Welcome back to Investing Talk Podcast.
Good to be back.
Today we are taking a close look at QSI. Now this is a fascinating life sciences firm, really zeroed in on next-generation protein sequencing in GPS.
Right, and they're doing that mainly with their flagship Platinum and GPS instrument.
Exactly. And the big question we're trying to tackle for you today is pretty straightforward, but, well, complicated too. Is now really a good time to buy the stock?
It definitely feels like one of those classic high-stakes situations, doesn't it? You've got this potentially disruptive tech up against just huge capital burn and, the really big established players in the industry.
Yeah, it's a tough field. So we've pulled together all the recent financials, the technical signals, key catalysts, basically trying to help you weigh that risk against what could be a massive potential reward.
That's the goal.
Okay, before we dive in, though, just a quick reminder, please hit subscribe, like the show, and drop a comment below.
Yeah, definitely let us know what you think.
And, hey, if there's a specific company you want us to look into for a future review, just leave that name in the comments. We'll add it to our list.
Okay, so where do we start? The tech, right? That's the heart of it.
Absolutely. Let's get straight to the innovation that's driving this whole thing.
The whole story around quantum psi, it really lives and dies by its technology.
Right. They're pioneering this proprietary single-molecule protein sequencing. And the goal, as I understand it, is true single-molecule amino acid resolution. Okay. Let's pause there, though. That's quite a mouthful. Why does that, single-molecule resolution actually matter in a practical sense in the lab?
Well, it matters a lot because it's potentially a huge shift. Think about it for decades.
Yeah.
Genomics, sequencing DNA, that's dominated the omics field.
Right, the blueprint.
Exactly, the instruction manual for life.
Yeah.
But the instructions, the DNA, they don't always tell you what's actually happening in a cell right now. Proteins, they're the actual machinery. They're doing the work. And current ways to look at proteins, proteomics, they're often kind of slow, expensive, need big sample.
Which averages everything out, right? Lose the detail.
Precisely. You lose the granularity. So achieving this single-molecule amino acid resolution means they could potentially sequence individual protein molecules much faster, maybe cheaper, and pick up on subtle but critical variations.
Like post-translational modifications, things the bulk methods might miss.
Exactly like that, stuff that really dictates function. If they can successfully scale this, it could, really could, speed up drug discovery, diagnostics, because researchers would get functional information, not just structural.
So moving from just seeing the parts list to seeing how the machine is actually running.
That's a great way to put it. Moving proteomics from being sort of reactive to maybe even predictive.
Okay, that potential sounds, well, genuinely transformative. So if the tech is potentially that good, why the hesitation? Why isn't this stock, already flying high?
Because fundamentally, they're David in a land of Goliaths. They're innovators, which is great.
Yeah.
But they're playing in the omics hardware space, and that market is, let's be honest, pretty much controlled by huge companies like Thermo Fisher, Illumina.
Names everyone knows, decades of trust, global sales forces.
Established relationships, and, crucially, just massive amounts of capital. We're talking tens of billions.
So QSI isn't just trying to build a new market for their specific approach. They're doing it knowing these giants could either cut them or just out-research them with deeper pockets.
That really nails the main risk. It's the unproven long-term demand. Yeah. Investors need to believe this NGPS approach is so much better that labs will ditch their current workflows.
A big ask.
A very big ask. And on top of that, they need constant, huge R&D spending just to stay ahead. It's an incredibly expensive race to run.
Okay, let's pivot to the fundamentals now.
Yeah.
Because this is where the story gets, well, kind of contradictory, doesn't it?
It really does. Let's start with the good news, the positive side, the revenue growth. It is spectacular. But you got to keep the base in mind. Fiscal 2024, they reported $3.06 million in total revenue.
Okay.
Now compare that to 2023, just $1.08 million. That's, 182.62% jump year over year.
Wow. That's huge growth.
Yeah.
It suggests those early commercialization efforts, getting the platinum systems out there, are actually working, maybe faster than expected.
It definitely points towards some successful early traction. Yeah, it's a big green flag in that sense.
But there's always a but in this sector, isn't there? Revenue growth often hides some pretty painful costs. What's the reality behind that 182% number?
The reality is the cost of trying to scale up innovation like this, the company is nowhere near profitable, deeply unprofitable, actually.
Yeah, deep.
Their net loss on a trailing 12-month basis is around megage $106.46 million.
Ouch. Over 100 million.
And what's maybe more concerning is that the losses aren't shrinking. They're actually increasing, up about 5.26% from the loss in 2023.
Okay, that really puts the challenge in perspective. Market cap is around $300 million, give or take.
$303.74 million, yeah, small cap territory.
And they're losing over $100 million a year. So burning through roughly a third of their value annually just to operate and fund R&D.
That's the math. It's a classic developmental stage picture. Negative EPS, minus $0.65. No PE ratio, obviously.
Expected, but still stark.
It is. Now, the good news here, and it's significant good news, is that management tackled that cash burn risk head on recently.
The offering.
Exactly. They did a $50 million registered direct offering back in September.
Okay, that sounds crucial. How much runway did that buy them?
It bought them a lot. It really shored up the balance sheet. According to their Q2 filings, that pushed their total cash up to about $214.2 million.
Right.
And that secures their liquidity, pushes their operating runway out potentially into Q2 2028.
3 years or so.
Yeah, roughly. And for a small cap biotech like this, taking away that immediate fear of, running out of cash or having to do emergency super dilutive fundraising, that's massive.
Yeah, lets them focus on execution.
Totally. Focus purely on getting those instruments adopted.
Okay, so the cash gives them breathing room. That's clear. But it doesn't automatically fix the stock's wild ride. What are the technicals telling us right now? It's volatile, we know that.
Volatility is definitely the name of the game here. I mean, look at the 52-week range, 0.620 towns, all the way up to 5.707 towns. That's extreme.
Huge swings. Where is it now?
Sources have it right around $1.70 currently. And yeah, the volatility metric, 11.08%, that's pretty typical for a small cap biotech driven by news and speculation.
Okay, so that $1.70 level feels pretty important right now looking at the chart. What's the thinking there? What happens if it holds or breaks?
Well, the $1.70 is acting as a kind of immediate resistance. Traders are watching to see if it can consolidate above that.
Right.
If it breaks through convincingly, you could see a quick move towards the next area of resistance, maybe $2 to $2.38, somewhere in there.
And the downside?
Immediate support looks like it's around $1.30. If it drops below that, it probably signals that the recent upward momentum is fading.
But isn't there a big warning sign flashing on one of the key technical indicators despite the recent run-up? The RSI.
Oh, yeah. That's definitely a major point of caution for anyone looking short term. The 14-day relative strength index, the RSI, it's sitting at 79.64.
And anything above 70 is usually considered
Overbought, yeah. It suggests the recent price surge was really fast, really aggressive, and might have pushed the valuation ahead of itself in the very near term.
So the chart is basically yelling, pull back likely, maybe take some profits. Even while the fundamental news like the revenue growth and cash raise looks positive,
Yeah.
How do we square that?
It tells you the current price action is probably driven more by momentum chasers and anticipation rather than, say, long-term institutional buying.
Okay.
It means anyone who got in near those lows, around 60 cents, they're sitting on massive gains. They're likely to sell on any hint of bad news or maybe even just neutral news that doesn't fuel more hype.
So high risk of a sharp drop is statistically elevated right now because of that RSI reading.
Statistically, yes. The risk of a near-term pullback is definitely heightened.
All right, so given that volatility, this stock clearly trades heavily on catalysts, on news flow. Let's look at what's driven it recently and what's coming up. Where's the next potential volatility point?
Yeah, catalysts are everything here. We've seen some big ones lately. Let's tick off the wins from the last, say, 3 months.
Okay.
Obviously, the $50 million financing we talked about in September, huge for the runway. But almost as important, maybe more so scientifically, was getting their Platinum Pro instrument placed at the Broad Institute back in July.
The Broad Institute. Why is that specific placement such a big deal?
Well, the Broad, connected with MIT and Harvard. It's a global heavyweight in biomedical research.
Right, huge credibility.
Exactly. Getting their instrument validated and used in a place like that is powerful third-party validation. It signals to other top research centers that this tech is worth adopting. That's critical for driving wider adoption.
Okay, so a big scientific win. Contrast that with the Q2 earnings release in August, which seemed to really spook the market.
Yeah, that was definitely a setback. They reported sales of $0.59 million for the quarter.
Okay, still small numbers.
Very small. But the problem was that missed the analyst consensus expectations by, Well, by a lot, 46.7%.
Wow, nearly 50% miss.
Yeah, missing by that much, even off a tiny base, it just creates doubt about how fast they're actually scaling commercially. The stock dropped about 5% right after.
Understandable. Okay, looking forward then. What are the key dates listeners should circle on their calendars for the next few months?
Okay, three big ones coming up. First, obviously, the next earnings report. Q3 2025 results expected around October 15th.
What are we watching for there?
We need to see how things look after the cash raise and that broad placement. Are costs under better control? Is the install base growing faster? That's key.
Got it. Number 2.
Second is the launch of their V4 sequencing kit. That's targeted for December 16th, 2025.
The V4 kit. Why is a new kit launch so important? Is it just an upgrade?
It's potentially more than just an upgrade. These kits often incorporate user feedback from the first versions of the instruments. So the V4 kit could bring improvements in, say, throughput, accuracy, maybe make it easier to use.
Which could unlock broader adoption.
Exactly. A successful V4 launch that gets good reviews could really help move beyond just the early adopters. If it's delayed or disappoints, though, it reinforces the risk narrative.
Okay, and the third key event.
Third is more about market structure. The institutional 13F filings expected in December.
See who's buying.
Right. That's when we'll see which big funds, which institutions maybe started or added to positions during Q3, that period covering the financing and the recent growth. Seeing significant institutional buying adds confidence and liquidity.
And beneath all that, you always have the speculative stuff with small biotechs, right? The rumors.
Oh, absolutely. That's often what drives the really big, sharp moves. The chatter tends to focus on two main things. First, rumors about a potential strategic partnership. Like, imagine if they signed a co-development deal with a major pharma company, a Pfizer or Novartis, to use the platinum for specific diagnostic application.
Instant credibility, potential revenue stream.
Exactly. Second is the perennial M&A speculation. The idea that one of the big established players, maybe Thermo or Illumina, might just decide to buy Quantum Sci to get their hands on the single molecule protein tech instead of building it themselves.
Just rumors, but potent fuel for volatility.
Very potent. High risk, high reward territory.
Okay, so let's try to pull all this together. You've got the potentially game-changing tech, that huge 182% revenue growth, albeit from a low base, the secured cash runway. But also these massive ongoing losses, the $100 million burn rate, and that flashing red light from the overbought technicals. How are the Wall Street analysts processing all this?
Well, looking at the sources, the analyst community on balance remains pretty optimistic about the long-term potential. The consensus rating is still a strong buy.
Based on how many analysts?
We looked at 3 reports, and their one-year price targets are, well, they're spread out. The range goes from $2.38 on the low end up to a very, very bullish $5.50 at the high end.
$5.50. That implies huge upside from $1.70.
Massive upside. Sentiment-wise, it's about 67% strong buy, so 2 out of the 3.
But not unanimous. We saw Canaccord Genuity put a hold rating on it recently.
It's right. So not everyone is fully convinced it's the best place to be right now, suggesting maybe better risk-reward elsewhere despite the innovation.
And that kind of division seems reflected in the overall rating from the sources we looked at, which came out as a 4 out of 10.
Yeah, that 410 rating really captures the conflict, I think. The positives driving that are clear. The innovative tech, the impressive rate of revenue growth, even if the dollars are small, and that potential long-term upside seen by analysts.
Okay, and the negatives dragging it down to just a 4.
That's all about the here and now, the painful present realities, those significant ongoing operating losses, that $106 million burn rate we keep mentioning.
Right.
The technically overbought conditions signaling near-term price risk, the fact that they are burning cash quickly, even with the new funding, and ultimately their complete dependence on continued funding and, more importantly, proving rapid, widespread market adoption.
So boiling it all down for the listener, is it a buy now based on this analysis?
The conclusion from the source material leans heavily towards risk tolerance. Until you see real, hard evidence of broader market adoption and a clear path to profitability, specifically getting that cash burn down and improving margins, the sources suggest the stock is probably better suited for traders comfortable with high risk, looking to play volatility around news events.
Not necessarily a core holding for a long-term buy and hold investor right now.
Yeah, it still feels highly speculative until those proof points materialize. Hashtag outro.
That definitely paints a clear picture. High potential, high volatility, high risk.
Yeah.
So let's connect those dots.
Yeah.
You have the ongoing financial losses, over $100 million a year burn,
Yeah.
tied directly to the need for product adoption. Thinking about what's coming soon, the Q3 earnings on October 15th, the V4 sequencing kit launch on December 16th. What single new data point from those events would be the most critical signal that maybe, just maybe, this company is starting to turn the corner?
That's a tough one. If I had to pick the most critical signal, it would probably be a combination of two things revealed in that Q3 report.
Okay.
First, the gross margins. Are they improving significantly? Is the cost to build and support these platinum instruments actually coming down as they make more?
Right. Can they scale profitably?
Exactly. And second, tied to that, the actual installation ramp rate shown in their Q3 numbers and, importantly, their guidance for Q4 and beyond. If they show faster than expected installs and rapidly improving gross margins, that's the combination that starts to justify those really bullish $5.50 analyst targets.
So better margins and faster installs. Anything less?
Anything less, especially if margins stay poor, it just reinforces the fear that they can't scale this profitably. Even with the tech advantage, it becomes a bet purely on execution.
Execution under pressure. So we leave you, the listener, with this fundamental conflict. You've got analysts dreaming of $5.50 based on future potential.
The blue sky scenario.
While the current technical chart, with that RSI near 80, is waving a big caution flag about immediate downside risk. They bought time with the cash raise, runway to 2028. But is it enough time to gain real traction before the giants react, or the money runs low again?
That is the million-dollar, or rather $100 million question, isn't it? Time is definitely their most expensive asset right now.
Indeed. Well, thank you for joining us as we explored the sources on Quantum Sci today. As always, keep learning, keep questioning the data, and think about how this fits into your own investment approach. We'll talk to you next time.